So you sit down at your computer and you really want to trade, obviously, but is it the right day to trade? Is it the right week to trade? You can look at the fundamentals and you can try to make a guess on an FOMC statement will move the market, or NFP, or unemployment rate. But what I like to do as a technical analyst is I like to look at the waves of the market. And there are basically three types of markets, okay? There's a trending market, there's a sideways market, and then there's just an ugly, choppy market. And you can see on the dollar for a while, we have had a beautiful trending market. And you know, everything, it just kept making higher highs and higher lows for the longest time. Now, you can see that we're in a bit of a correction. So this is a straight up trend. Now we are in a chop. So how I like to look at the market and determine whether we're going to trade or not is if we are in an impulsive state or if we are in a corrective state. Now, when the market is impulsing, those are your opportunities to get in on the imbalance. So basically, whenever a market impulses one direction, it creates imbalance. And that's your opportunity when it comes back in to the imbalanced area to take a trade. But when the market doesn't give you any opportunities, pretty much like it's looking like right now, it's kind of hard to find a trade with high probability. So let's go down to a lower time frame, and you can clearly see how the market just is undecisive. It hasn't figured out what it wants to do. So until it figures that out, we don't really want to mess with it, honestly. We don't really care what the market does until it makes a decision, because right now it's the bulls and the bears are just battling out inside this channel. So ultimately, you know, there is an opportunity for, you know, some bullish divergence, you know, maybe an early buying opportunity with the momentum dying down. But ultimately the year just ended and the dollar is very bearish so far. So we could see this dip down again, touch the bottom of the channel, and then maybe see another move up. But ultimately, with it being just this sideways, even inside of a very correctional state, you gotta just understand where you are in the market and understand that it might not be the best area to look for trades until there is some type of an impulsive move or some type of break of structure. You know, we just had the holidays. The volatility is extremely low during the holidays, so let's let the market kind of make a move, make a decision, and then we'll be able to react off of that. All right, so after you look at these higher time frames and you kind of decide what the market looks like, you need to go down to these lower time frames, depending on the type of trader you are, right? But for us, we just like the overall probabilities regardless, right? Even if I was scalping on the 5-minute time frame, I would still want to know these higher time frames, right? So on the 1 hour, we have some levels marked off, okay? We have some intraday resistance up at the top here where, you know, the market clearly hasn't been able to break since December 22nd, so before Christmas. Since December 15th, so way before Christmas, right? And then it struggled to break down here as well. Back in December 13th. So we have some intraday support here. And then way down here, we have a higher time frame demand area. And this is honestly where I think the market is going to head to bare minimum this week. I think we are going to get a slip down into this. And once the market gets here, we're going to want to see some bullish divergence forming. And possibly something like this with a pattern within a pattern. If we can see this move right here, we will be looking for strikes right there or strikes right here, bringing it back up into this intraday resistance area. Now, If the market decides to hold here, or maybe just end up coming back to the top of this channel into this intraday resistance, I'm not necessarily looking for sells just right away. And I would have to see some type of fake move and then it come all the way back into the channel for me to look for sells, because ultimately I do see the bullish divergence. I don't want to play against the divergence. I would like to see it really just take off, right? If we get a big break like this, and it has to be impulsive, like I spoke about at the beginning. It cannot be slow and ugly. It needs to be an impulsive move. If we get that, then I would look for the resistance to turn to support, and look for a possible move to the upside from there. Okay, now this would be the other area that I would look to, watch for the market to hold at, but we're not there yet, so we're not going to worry about that just yet, right? So that's it for us today. We're not really looking at the whole market. When the market is kind of choppy like this, or it's in an area where a whole bunch of different things can happen, we really just wait for the dollar to make a move, right? Because when the dollar goes up, a lot of it, pretty much everything goes down. And when the dollar goes down, pretty much everything goes up. So we just, especially in Forex, right? So we just like to wait for the dollar to make some type of move. And then once the dollar kind of gives us a direction, then we will strike. We can pair this with the fundamental analysis, and we can pair this with some sentimental analysis as well from what the Fed is going to be saying. But ultimately, the technicals are telling us to just sit on our hands and wait for a good opportunity.